otherwise, I would like to welcome you all to this member meeting with JAK. We have been kept this event quite open, so some of you might have seen this and are not members yet of JAK Bank, but you're very much welcomed as well. My name is Sophie Griepenberg. I'm on a part of the board of JAK Banken, and I'm here today to moderate this seminar. So you're all very welcomed, and I'm going to actually make sure we use this hour as efficiently as possible, because we'll need to stop around 7 o'clock. But if there's any questions we want to address, maybe we can gather them in an email or a chat and we can get back to you. So there will be, I will soon give the words to Hans Stegeman. Oh, I said that in Swedish. Maybe there's a Dutch pronunciation. Stegeman. Very much welcome. You're the CFO of Triodos Bank, and we are very pleased and happy to have you here. Thank you for taking your time out of your busy schedule. I will give the word to you, and we will just wait with the questions until the end, everyone, so Hans gets to do his presentation. So please stay patient. I know there might be several things that you are interested to learn more about. So thank you so much, Hans, and welcome to this members meeting. That's what we call it in Swedish at JAK Banken. The floor is yours.
Thanks for having me. And maybe start with a little correction. I'm not a CFO. I'm the chief economist and director of impact and economics, as we call it in at Triodos Bank. And well, I don't see you, but nice to speak to you at least. And my presentation, I think there are two parts of it. Part is about Triodos Bank. And part is, and that's more my chief economist part, on what finance can and should do to make the world a little bit more sustainable. So I will just dive in, and like Sophie said, if there are any questions, we can do that. There will be enough time to do questions. I will just do my presentation, I think 25-30 minutes, and then we have time to discuss everything. So I don't know how much you know about Triodos Bank, so I will give an introduction. Hopefully you can see my slides, right?
Yes, I can see them.
Okay, then hopefully the rest can also see them. So Triodos Bank is, in terms of sustainable banking, a quite old bank, 45 years ago, founded in the Netherlands with the explicit aim to make money work for positive social, environmental, and cultural change. So the aim was really about what we call the conscious use of money. How can you use money in such a way that it delivers societal change? We've grown over the years. Now assets under management of 23 billion, a little bit more. These are a little bit older figures. 1,850 co-workers serving 750,000 customers. Active. Our main activity is in the Netherlands, the biggest branch. Further, Belgium, the UK, Germany, and Spain. And we have an asset manager. I come back to what we do and what kinds of money, as we call it. And so central in all we do is financing change and change finance. And we always take that combination. So it's not only about what we finance or invest in, but also how we do it. And in the end, we also want to change finance. So we only invest in sustainable enterprises that operate in the real economy. These are two things that maybe require some explanation. So sustainable means, and that's where we started decades ago, really looking at the negative impacts. So exclusionary criteria on fossil, on nuclear, on human rights, on everything you can imagine. We have a very lengthy paper on it. That's what we call our minimum standards. So what we called sustainable was mostly framed negatively, and I think we have moved on. I'll come back to it later, what we currently do. So finance change is an important first element. The other part for us, that's also why we were founded. We were founded to influence the banking sector at the national and global. You need to have aspirations. level to help deliver our mission. Because the more sustainable, diverse, and transparent the banking industry, the more we believe people's quality of life will improve. So we are not only trying, so we are ambitious, we're not only trying to finance the right stuff, we also try to change the financial sector. So this as a first introduction. And we also firmly believe in all what we do and what we say that all money has impact. And if you look at our webpage and if you see what we advocate for also in policy circles, we always stress that also things that are not called sustainable definitely have an impact, but mostly a negative impact. And in the lingo of sustainable finance, people forget it, and it's all about either sustainability risk or about positive impact. But everything has impact. And what we try to do always is, and our clients really ask that from us, to talk about that impact of that money, so other than the monetary value. So this is our building. Of course, it's completely circular, but the picture is not about the building, but about the text. And we truly believe that how we invest in the end, or how the financial sector invests, determines and defines the world we want to live in. And this kind of language is always what our clients also expect from us, how we communicate, but also what we do. Also in our process, I'll come back to that later, also in our processes, the first question we ask is what's the positive impact of what we finance or what we invest in? And then, of course, we do risk return and the normal banking stuff, but that's where we start. So this is a little bit about who we are. And now maybe an update on what we do, or an update. We do this for the last 3 years. So I told in the beginning, sustainability was framed a little bit negative. So don't do unsustainable stuff. And having a little bit idea, yeah, organic farming might be okay, energy transition and renewable energy, that's all okay. But we did not think about a more forward-looking idea of how can we create a better world. What we do since, I think, 3 years now is working with transitions. I come back to that later. So transitions, we all know the energy transition, resource transitions like circular economy, food transition. And then we also have the societal transition and well-being transition that are, to be honest, if you ask me as a researcher, not transitions, but themes. But this is how we have clustered all our portfolios and all we do. So what we have defined for all those 5 themes of transitions is to say, okay, but this will help to accelerate the transition. So trying to be more forward-looking than saying, oh, this is sustainable enough. Because most of the time also with us, sometimes are things that we call, so I have to be very critical also to us, sometimes things that we call sustainable are only less unsustainable than the mainstream. And this is quite irritating if I say this kind of stuff also to my colleagues, because it means, for example, organic farming is better than conventional farming, but might still be not sustainable enough, as an example. Come back to some other examples later on. So, and why did we change it? Now I'll come a little bit more to the economic stuff, because I'm still the chief economist. Because what we've seen over those 45 years, that the world has changed dramatically, that in 1980, when we were founded, we could at least say, well, if we do things a little bit better and policy moves on and everything in the world goes in the right direction, it will be okay. That's no longer what we can say. We live in times of a polycrisis, of a relationship crisis with the ecosystem, of unequal opportunities of income and wealth. But for me, foremost, and that's also what you see back in all we write, flawed financial economic thinking. So that's also what we want to change, finance. And we think that we risk catastrophic consequences if we don't act now. So we changed a little bit from being only nice and saying, yeah, we do sustainable stuff, to being a little bit a little bit more, not all of us is as radical, maybe I'm too radical sometimes, but feeling the urgency that we need to do stuff. And the only thing what you can do then with money is not saying, hey, it's good to do it a little bit better than now. No, it's advocating for system change. So we've shifted from being, let's say, in the green growthish kind of corner towards more post-growth, more radical ideas on system change. And this is a strategic choice also for us to do this a little bit differently. And if we, so now I go a little bit into finance and then I come back to what we do as a bank. So bear with me if you're not so interested in the systemic stuff, but it is important. It's also what I tell my colleagues. We need to understand the world we live in, the financial system we live in, to understand what we can do as a financial organization. So what we see, and I think I have a typo over there, that finance, so people think sustainable finance, hey, that's nice, we can do nice stuff with our financial system. But it's not necessarily so that there is a link between what we finance and sustainability outcomes. There are a few elements, I will not discuss them in full detail, but I will just highlight some of them. The second one is very important. So there is no clear connection between finance and the real economy. A lot of finance is also only finance with finance. For instance, if you have a mortgage for an existing house and house prices have increased, a new mortgage on that house will do nothing in the real economy, will only lead to more finance with finance. Only if you say, hey, we give you a mortgage as a bank, only if you make your house more sustainable. And you get a discount if you do that. So if you change something in the real economy. So that link is in the activities you finance. So SME financing is in most cases financing the real economy. But also how you finance, with which kind of instruments, or what do you ask from your clients to get that link with the real economy. So this is, from a banking perspective, very important to understand the link between what you finance and the real economy. Another point is that by nature finance is extractive, because, and that's also related to that picture on the right hand side. Finance is based on risk and return. We have a whole set of regulations and rules how we do that. This is what is institutionalized in finance, risk and return. Impact is not. Positive as also negative impact is not institutionalized in the way that we have exact rules. Yeah, of course, we have sustainability regulation, but these are more about the negative impact of what's happening in the world towards risk and return. So it's not about the impact money has or what your finance has in the real economy. And there's a dilemma with it. As long as you can extract from nature for free or from people or whatever, it delivers a higher risk return in general. So that is very easy to finance. Extraction finance is very easy to do. It delivers higher returns, so superior returns as we call it, but it is very bad for planet and people. But the other way around is very hard to do. So restorative finance, regenerative finance, make sure that you do something good in terms of impact is very difficult, because then the only solution we have in finance is then trying to find an earnings model for something that was free at first. And of course, we know the carbon market as an example. Then we try to regenerate by making cash flow streams out of what was first for free, which is kind of difficult, very difficult. So that's whole with nature finance. The idea is, well, is logical from a financial perspective, but it is very hard to get there. There's a lot of things we do there to try to get there, but it is also very simple. A tree standing in a forest, you cannot finance a tree that stays in the forest. Why should you finance it? But if you cut a tree and make a table out of it, of course you can finance it. It's as simple as that. So regenerative finance is very hard. So I leave the other elements. I have a lot of papers on it, but I leave it for now, because we have some inherent problems with finance and sustainability that we need to solve to understand what we do as a sustainable bank. So we need to restore the link between finance and the real economy. If we don't get that, and that's often what I see in sustainable finance, that there is no clear link between what we do and what the outcomes are, then it's hard to get somewhere. And I think a great example of this is all what's happening in secondary markets, so in equity markets and bond markets. So you trade existing shares or bonds. Nothing changes in the real economy. The only thing you hope to do is that something happening with the cost of capital of those companies. But it's always an indirect link. And this is by far the biggest market in sustainable finance. And this is where we still are in sustainable finance. If we look in the world, that it's mostly about, so if we talk about sustainable finance, especially in equity and bond market, it's about ESG integration. It's integrating sustainability risks, not positive impacts. So what we get then is portfolios with tech companies, with financials, with a low carbon footprint, but not helping anything about the transition, what I was talking about. So there's companies you select then in sustainable portfolios, don't have anything to do with a transition. And I think that's problematic. So the result is, and this is really a macro picture, I do it very fast, is that money goes completely in the wrong direction. People call this often the sustainable finance gap, which is, of course, a wrong name for it, because we don't miss capital. This is an allocation problem. This is an impact problem and a mispriced risk problem. So when we see it in the energy, resource, food transition, we see it in the SDGs, we see it everywhere. So it is in the structure. So it's not, the solution is then not saying, hey, we should allocate more private capital to this or that. No, that will never work. We need to work on the structure of the system. I know in the end of, so just before dinner, this is maybe a lot to digest, but we still have to do it, I think. So we need to go in this way, because otherwise we don't have the link with the real economy. We don't know what we're actually doing with finance. I don't know if you saw it, what happened, but the arrow went to that side. And the rest should be phased out of finance. Because if finance doesn't have a link with the real economy, what are we doing with finance? So, and well, this picture, I can talk for half an hour only about this one, so I won't do it. But the big message is we should not only work on sustainable banking, as we do as Triodos Bank. Yes, we should do it. So within the system, within a bank, we can, as an ethical bank, make different decisions. So that is what finance is doing. So we work a lot on impact first, our purpose, how we see the link with the real economy. So what we find is choices that you can make as a bank yourself. But it is also about the institutional structure of banking. It's also about money creation, bank supervision, monetary policy, all kinds of that stuff. So that's also how we as Triodos Bank lobby on all different levels and also have an opinion on what the financial system should do and what the rules should be. And not to forget the last one, and this is also sometimes a problem. So what is finance also depends on how the economy is organized. So as a sustainable bank, as an ethical bank, of course, we want to finance more sustainable alternatives, but most of the time it's hard for them to get the business model right. And that is also always to do with the rules in our real economy. So unpriced externalities, competitive disadvantages of more sustainable SMEs. So that kind of stuff. So that hinders also scaling up of sustainable banking that is in the real economy. So we should always link those three levels, so the institutional structure of finance, what finance does, so what you can do as a bank, and there's also problems in banking because it's about scale, Banking is also about tech being more efficient. If you have a high skill, it's also about compliance that leads to a lot of skill. So to be compliant, you need to invest a lot as a bank. So that limits what you can do as an individual institution. And in the end, it's also about what's happening in the real economy. But I promise you not to talk too long about this slide. So then this is as background to what we actually do at the moment. And here you see some things back. We still think we have a role to play. So why we exist is the constant use of money in everything. So what we finance is always about positive impact and transition. And how we finance it, this is a combination of financial tools or products and the relationship we have. So we truly believe that it's always a combination. It's not just having a product and being able to finance. It's also about your relationships or being in the right networks to do the right stuff. This is a very technical. I like this picture, but well, I'm a nerd. This is about transitions. What we've done, and as a research 2 years ago, we tried to understand what our role has been in the transition on wind and solar in the Netherlands and the UK. So what we finance, but also what we have advocated for. And could we understand the logic on what we have been doing in the past? So also advocating for certain regulation, for certain rules, for certain standards, and then on the other hand, just financing stuff. And could we find a logic there? And this is about transition. So in transitions, what you need to do is finance or stimulate grassroots movements to show that change can happen, but also change, and this is why this transition theory, so also work on the regime level, trying to influence policies, regulations, etc., to be able to scale up faster, or from a banking perspective, to make those initiatives more profitable and easier to finance. So, and what we found in this research, well, of course, this was all pioneering by people from the bank, but there was some logic in it. It really helped to be in the right networks, to know what to advocate for, and then form coalitions to get things done. And of course, here are only the successes. Of course, there were numerous failures. And what also helped for us as our own business model, being experts in a few niches. So not trying to do everything. So we were the first in wind in the Netherlands, for example. So the first wind turbine was financed by us. Did a lot of solar. Now we moved on to batteries, and we really try to be entrepreneurial, pioneering in the niches of transitions, because we are also relatively small. And then you can find deals that are still also profitable for us. So that's a little bit the strategy. We found out that's what we have been doing, and that's what we should stay doing. So, and here, of course, this is our story on our how we see our vision on how we do our impact. So there's 5 transitions, but also fundamental change. And there are a lot of words that are close to post-growth thinking, that kind of stuff, trying to. And of course, we're still a bank, but from a mission to change the system from within the bank, so sometimes you also need to use different words. I think that is important to remember, because otherwise you get mainstream too. So, and I have a lot of these ones. So these transitions again, but maybe the next one is more interesting. In a transition, you also need to use different financial instruments, depending on the phase of the transition. What we've done over the last, or the sub-transition, what we have done over the last few years is trying, so we have a bank, we have bank finance, SME finance, we have our asset manager, private debt and equity listed, and we have, well, some gift money, foundation with regenerative money. What we tried to do, we're still not there, is to build a logic also what's the risk appetite, where in a transition, and what should we do with what kind of money. So is it more venture capital, is it crowd? So in the UK we do a lot with crowdfunding, and how can we combine it also to have a pipeline also for our bank finance. and be in the right networks. Well, this is the theoretical story. In practice, this is very hard, of course, as you can imagine, because you need to align all the people in the bank to do kind of the same. And I think we're now, after 3 years working on this, that we have the same kind of strategy with the same kind of focus for all parts of the bank. And that is already a success. Does it work in terms of pipelines? No, not always. But we know where to find each other and to work with this idea that in different phases of the transition, you need to have a different risk appetite and not lose your customers when they are getting successful. So this is the idea here. So, and then as last part, yeah, it's taken longer than I expected, but yeah, it depends only on me. I talked a lot about transitions, but we're now talking about transformations, because we think that even transitions, which are kind of isolated from a sector perspective or whatever, are not enough. So we're talking now, our new lingo is about transformation. So a transition is a process of change in the structure. Oh, wait a minute. Culture and practice of a system in society is from one state to the other. But a transformation is a specific kind of transition, namely one that is providing a level of depth and or skill in system change. This is very theoretical, I know. But we are looking now for those specific transitions that have more impact. That's the easy way to tell it. And because we cannot claim it beforehand, because it's all blurry and complex, etc., we are talking not about transformative impact, we are talking about transformative potential. So we're looking for those companies that potentially can be transformative. So this is very theoretical. And this also, so I'll leave it here with this part, and I'll give an example. So if you want to reduce greenhouse gas emissions in cattle farming, there are a few options you can do from a financial perspective as a bank. You can change a parameter, so you can finance additives for the feeds of cows so that they emit less methane. You can anticipate, so you can change a process, so only sourcing local feed to the cows. This delivers a little bit more, change the system a little bit. But this is still shallow. For those who know Donella Meadows and the tipping points and the leverage points, this is based on her theory. And Donella Meadows is from the Club of Rome and wrote in 1999 a nice paper about leverage points in the system. So if you go more to the right, then it's about redesigning and inspiring. And if you go back to the cows, so changing the design is decreasing the number of cows. So instead of we still finance organic cattle farming, we could also say we do that less. And from the inspiring part, really changing the mindset, believing in eating less meat and a smaller role of animal protein in our diets. This is a discussion that we at Triodos Bank already have for, I think, 2 or 3 years. Do we want to go vegan? Is our role not more to finance only meatless alternatives in terms of protein than cattle farming finance? We have not ended the discussion, because you could also say in a transition we should stay by our organic farming clients and help them to transition. So we have all kinds of discussion, but this is in terms of transformation and transformative impact. This is the way we try to think as step. And then we have also a way how to assess this. So we're looking not only to the activity itself, the what. I have to do this. So looking at the potential to create profound change in product, services, and business model, but also to the depth of system change, the scale and scalability of the system change. So that's the what, and the how is also looking at who does it. What is the company? What's the mission? What's the motivation? What's the network? Is it experimentation? Is it collaboration? Is this comprehensive change? This is very hard to answer. So we made a white paper over the dashboard. We experiment a lot internally, and most of the time we don't know exactly. But I think that's where we want to be. We want to be at a place where we cannot trust on data because there is no data, that we can really holistically think on what would help the transformation. And from that perspective, make our decisions what to finance. Why is this important? Because what I see happening, finance is more and more a data game, that people in finance don't decide themselves anymore. They trust simply the data, and we want to have people making decisions and understanding systems, understanding the people they finance and how they make those decisions. So this is what we do. And in the end, and I think this is my last slide, I skipped a few because I want to say too much. In the end, if you want to have change, and I think this is what we try to do, is always three things. If it's on the company level, but also as a chief economist and whatever, and also in our communication, the first one is saying what is wrong in the system, not financing what should be phased out. So be very strict in exclusion, because if we don't discuss what is wrong, we never get it right. And I think, especially in sustainable finance, is mostly only the time on, yeah, let's do nice things, but also have the hard discussions on the things that should be phased out. So criticizing the system, phasing out unsustainable activities. A second part of a transition is always have an idea where to go. So we have made vision papers, we have some ideas about transformation, transitions. It's not exact science, it's experimentation, we don't know, but we should have an idea where to get to. And the third one, and that's of course the core business of us as a bank, empower and scale up sustainable activities. Show or transformative activities. Show what can happen in this economy. Make that new economy alive in the here and now, how difficult it sometimes can be. I think that's what we try to do. I think I want to leave it here. I have a lot of details, and I want to leave it here for now so that we have enough time for questions. And I saw some already in the chat, but my Swedish is non-existent.
Thank you so much, Hans. I'm so glad we're recording this because I think there's a lot of slides and textures that I would like to get back to. And we could probably have a series of seminars with you based on these different topics and dive deeper. So thank you so much. But I think I will take the opportunity to start with my question, and then we have 4 ones in the chat. But otherwise, I would welcome everyone to raise your hand if you have questions, and I can see how many we can cover. But please feel free to raise your hand because it's quite nice to be able to not only ask in the chat, but ask like this. We're not a big room. So Hans, you talked about fundamental system change quite a lot and the importance of making that change. I wonder how you as a bank navigate of being within the system, embedded in the system with all the regulations and everything that comes of being a bank, with creating the space and opportunity to even be an actor for system change. You touched upon it a little bit, but could you please explain what does that practically mean for you, and or how big is the fundamental system change work part of your work, with all the other obligations and expectations that you have?
Yeah, and that's a good and a fair question. To be honest, of course, it's quite hard. We are a bank. We have a lot of obligation, a lot of regulation we have to comply to. We also have to make a return because we also have to earn a living. So that's still the reality that but this is also where we came from. 45 years ago, the founders of the bank were keen on making it a bank, a commercial bank, because they believe that you can advocate for system change in a better way if you're part of the system, if you understand the system. So I think, and I have to be honest, so of course, so I talked about transformative change. We have now a target for 20% of our portfolios that should be aligned with this. with this kind of thinking. For the rest, if it's also mortgages, and then I touched upon mortgages and say, yeah, we have to understand the link with the real economy. So what we do, so we give, we make arrangement to make your home more sustainable, and then you get a discount on your interest rate. If you have a more sustainable house, you get also a discount rate. So we try to combine this thing, but to be honest, this is not the most impactful part of our portfolio. Also, we have also listed equities and bonds. I am not a fan of it in terms of transitions, but it's also a wish from our clients to have liquid investments. And of course, we engage, we are strict on our minimum standards or on our exclusionary criteria, but is that really system change? No. So sometimes you also have to earn a living, you have clients that ask something for you, so that's also what we do. But what I experienced myself and also my colleagues so in my team is also our advocacy team, if we go lobbying in Brussels or in different countries, we are credible because we're part of the system. And we know our stuff. We know how to implement CSRD. We know and all the regulation in Europe that we have. And that really helps to be credible also in changing the system, in being in the right place and being asked to give your opinion on stuff. And I think that works better than working at an NGO, because that would be my other choice, or in academia. Because you don't know the practical stuff most of the time. You're only criticizing the system. So I think that's helping. But yes, we're also a bank. We need to also do all the normal stuff, and that's sometimes also hard work. And we make compromises in the sense that we cannot do all the impactful stuff, but we never make compromises on our exclusionary criteria.
Thank you. I think if everyone had 2% for system change, that would make a huge difference. So I don't think it's too bad. Maybe you already answered. One of the questions was related to arms trade and exclusion, that there's a lot of pressure now for banks who always had the arms trade as an exclusion, no to go, and suddenly start to call it security instead. So it was just a practical question if that's still a part of your exclusion list, or do you feel the pressure to change it?
No, this is a point, you can also see it on our website, we're very vocal about, or relatively vocal, to say that this has nothing to do with sustainability, in our view. So weapons, defense spending. So I think it's weapons spending, because you never know if it's going to end up in defense or attacking. So our line of thinking is, yes, of course, Western democracies have to have more weapons. That's democratically decided by people. But why should private finance step in if the main demander of those weapons are governments? Why should private finance those weapons and earn a big return out of it at the expense of our public funding? And having always an incentive, because that's what we know everywhere, if you finance the military-industrial complex, in the end there's a search for yield. Also in defense, that means a search for war and more conflict. That's what we have seen in the US, and we don't want to be part of it. So our line is still and has always been the same. It's not uncontroversial, because people think, yeah, are you then blind to the dangers? No. This is a democratic and a public task. It's not up to private finance to have a role in there. That's our viewpoint.
Thank you so much for that clarification. The question in Swedish was clarification regarding the slide on fossil fuel energy and renewables, if the numbers were globally or from the Netherlands context.
They were globally in trillions of dollars.
Yes.
And yeah, they're global. But if you look for those numbers, you have numerous numbers which are all different, because nobody exactly knows what money is missing. Because and especially not if this should be financed privately or publicly, or It also depends on maybe we can do less harm and have different practices. So you can always find big numbers, but you should get nervous if people say, yeah, but this should be done by private finance, or this is the financing gap. It's never a gap. It's allocation, which is something different.
Thank you for clarifying that. We all need to practice that language. Maybe Charlotte, you would like to ask, if you want to unmute and ask your question that you had in the chat, please go ahead.
Yeah, yes, of course, again. And partly you have already discussed this, because the question really arises from the dilemma of living in between, in the friction between the financial return and making the impact. And I can hear, and you actually gave a couple of examples. So my question would rather, the one that remains, is what do you think? I mean, with Triodos Bank, you have now 750,000 clients, and you are spread in more countries than Netherlands. What has been your success factor?
The success factor, yeah. I think it has been the pioneering spirit of the people who ran the bank. Maybe a little bit of luck sometimes. So being at the right place at the right moment. So in the 80s in the Netherlands, so just after Chernobyl, they financed the first wind turbine. And there was, of course, a whole movement against nuclear energy at that time. So that was, and if you are then a first mover in such a sector, then you gain a lot. So I think that it's also always also a matter of coincidence, pioneering, and I think maybe to mention, we scaled up dramatically at the financial crisis. So we were, at least in the Netherlands. Well, there was also another bank, but of course we did not get state support. Well, a lot of banks got. We don't pay bonuses, moderate salaries, so we got a lot of extra clients, especially at those times. So if we want to scale up ethical and sustainable banking, it would be very beneficial to have a financial crisis again. So it's also, and that also have to do, to come back to the beginning of my story, many people are not aware what money does in a society. And so they see a bank as something like a commodity, something neutral. And they don't understand that if you have a savings account at the bank, and that banks finance all detrimental activities, that it's also their money that goes there. So that's also why we always stress that story about money because it's also our marketing. So we don't have a huge marketing budget, but that's what we also try to let them understand. It's about your money and where it goes and what you do. So especially people on the sustainability, we still have a lot of people on the sustainability side, although you don't see it in politics. But that group that is very worried about environmental damage, they often forget that also their money and their choices, what they do with their money, is an important part. So this is another line, I think, that has been our success in the past, especially in the financial crisis. So this was not only on the sustainability side, but also being a bank that wants to do something for the real economy and not having all kinds of complex products. I think that story was also part of our success.
Thank you so much, Hans. And that's actually a story JAK can also present, because we don't have the same muscles with all these investments and funds and so on, but we have the same story when it comes to what our bank is doing on the bank. So we had another question from Adam related to debt. I assume personal debt of individuals, maybe. Adam, would you like to ask your question? And please be very short if you can, so we might have room for one more.
Yes, of course. Thank you, Hans, for the talk. And I've seen that you've written a bit about neoliberalism. And I just wanted to see if you and the bank has a view on how to combat. I know it's hard for bank to combat this, but a view on like inequality, because I've seen it's quite connected to sustainability as well. To get the people on board, you have to deal with the inequality issue as well.
Yeah, I think to start with, the whole financial sector is an inequality accelerator. because that's what we do. So people with already a lot of money, we serve at the cheapest price to earn also from them, but also to create more wealth from them. And people who don't have money get underserved by the banking sector in general, because they have to pay to get a loan or whatever. So it's very hard in general for the financial sector to say we do something with inequality, because I think the financial sector in total is part of the problem. What we do, very simply, is we don't have credit cards. We don't have consumer debt. We have a limit to mortgages in the Netherlands. So in terms of our products, we limit ourselves. And then clients start to complain, why are you not doing that? But I think that's our moral obligation if we see inequality and the role of finance as a problem, is to restrict ourselves. So that's what we can do. Is that the best story? No, but that's what we can do. That's in our hands. We have a challenge, and I have to be very honest. We have a challenge to reach all society. As a bank, we are sustainable, a little bit elite is the feeling then. So we are digital only. So still people like to go to a banking office sometimes, and that's a challenge. So from that part here, I know what the answer should be, but the answer is, so the answer should be that you have cheaper accounts or whatever, and that you help people, but it's very hard to get that done, to be honest. So I need to be very honest that it's, and of course we try to do also with a foundation and also sometimes with SME loans, but then it's business, right? So with business you can do something, but on the personal banking side, it's very hard to do something really positive. Maybe this is too honest, but I think this is for most banks the biggest problems. How, if you see the problem, how you can also be part of the solution.
Yeah. Thank you so much, Hans. I think we still have time for one more question. I think we're being super efficient. Lena, you had a question related to skepticism around talking about sustainability and money, like financial system change, how to shift the focus. Maybe you want to please ask your question.
Yes, so thank you very much. You were talking about this just recently, like how to just exist with customers. And I guess my question is around communicating this way of having a bank with skeptics that can be found within like regular customers, but also the whole economic and financial sector. How do you deal with critics, skeptics, and even ridicule around sustainability and money? Because shifting this focus from profit is so hard. Do you have any advice, maybe for all of us?
It would be great if I have a very thorough. Well, what I learned, but I think that's not new. Of course, there's skepticism. There's even a lot of negativity for, let's say, 20% of the population. And also, but it doesn't help to listen or have a dialogue with most of them. It's about the middle part. It's about the silent majority most of the time. Now, maybe a better way to phrase my answer. What we did last year a survey in the Netherlands about social tipping points to find out what people were thinking on those 5 transitions, what they were thinking and what they were doing. Also to help ourselves understand, so okay, if we communicate about transitions and change, what would help and what not. That was not our public agenda, but of course there were some learnings for us. What we found out that in the Netherlands, 80% of all Dutch people were in favor of all those transitions. Yes, they want to have the energy transition. They want to have a more sustainable food system. They want to have a better well-being. Everything. That was the easy part. If you then go into, so that 20% that would be against everything, that was also not in there. But then the question was, okay, but how are we going to achieve it, and what's your role as a person? And then we saw some interesting things. And so talking about vegan is maybe not the best strategy, because a lot of people are not vegan, and having a higher price on meat is where you should not go. But you can go in place where you can seduce them, making things more attractive. So also in our communication, you get always a lot of marketing, a lot of ideas how you can do things. So on a personal level, but in a positive way. Because it's not that people don't want to be sustainable. I think it's in Sweden the same as in the Netherlands. A lot of people want to, are not always prepared to give something up. Definitely not. But they like, if you have concrete ideas and you're sympathetic, then they come along. I don't listen to all the extreme critics on the populist right side. That's not relevant. That's even not relevant for the scale of a bank as we are. We are also in the Netherlands a relatively small bank. That's not our clients. So hopefully we can have sometimes a debate on it, and to have a bigger podium, and to be the, and so you can use it in some way, but it's not relevant. And I think it helps to remember sometimes, yes, there's a lot of skepticism and criticism, but is it relevant? Does it matter? Does it matter for your own business? No, most of the time not. And that kind of thinking helps me at least to be a little bit more positive sometimes.
Thank you, Hans. I think it's a good lesson for us also to focus on the customers that we want or could reach, or cares about these topics, but just don't know that their money is doing harm at the bank. You're just gathering those people and talking to those people. We have maybe, I think this come maybe from an investment perspective, Lena, your question, or maybe it's a slowly environmental, or both. What is your view on advanced biofuels with HVO or biojet fuel?
The answer is we changed our position a few years ago on biofuels. We were first positively and later not. But for us, also in our positions and how we think about what's going on in the world and what might be unsustainable, we always have to think what is relevant from our financing and investing perspective. So biofuels is not a big deal for us because we don't do any combustion engines producers, airplanes or whatever that use that on a large scale. So my research capacity is limited. We're a small bank, so I have only a few researchers. So if the question is, should we have a new position on this topic, then my answer is no, it's not so relevant. But for instance, on deforestation or other stuff, yes, we do a lot of work. But I think we're nuanced on it, not completely positive, and we changed over the years. But if you want to have more details, it's probably somewhere on our website. I can send the link, but I don't know by heart.
We can try to find it so there's more in depth for those who want to go. The last question might be the one we can wrap up with, because the question is, do you see difference between Triodos Banks and JAK Banken? So maybe this is a question for both of us. And I also see there are a few board members and staff members in here in the room. But I don't know exactly how much you do know about JAK, but maybe what are similarities and what are differences?
Yeah, that would. I don't know so much about JAK, so I cannot tell so much about it. I think we're older, more so, and therefore at least larger and also more institutionalized in the end, which, like I said, makes some things easier to have impact, but also sometimes harder because we are also partly a vested interest already, and that has also consequences. Yeah, I think it's better that you say that, Sophie.
Yeah, I can add. I think we might be older. I don't know. I'm looking at my board members who's been there. I think it's 65, right, Charlotte or Lena?
Much older.
Yeah, I'm just looking at my colleagues.
Yes.
Yeah, at least the Swedish part of the association, and I think also maybe a big difference. I think if I'm right, Hans, is that you are not funded as a cooperative, right?
No.
And that's something we are. We are a cooperative, which means the bank is owned by its members. So we also have this democratic decision making where we can influence the bank when it comes to its products. So I think that might be an important difference in terms of legality and what we are as an organization.
Yep.
And in Sweden, there's only 2 of us, and we, according to the existing laws and framework, you can't start a new one. So we need to survive, or we change the laws. Maybe a difference is that, I mean, you said you're small in Netherlands. It will be interesting to compare in terms of per capita. Maybe someone good at math can do it very quickly. But we are 16,300 members. Not all of them are very active customers. And we're 10 million people in Sweden. We're still quite small. And I think when it comes to the revenue, we don't have these muscles and the size. We don't have our own funds. We don't do investments. But I think some of the things you mentioned are truly inspiring for us, because we know that a lot of our members, that's what they want. They want their money to be used to make like a real impact in the real economy towards transitions and transformations you were talking about that is needed. So I think something that we're lacking that you have is the size and the muscles to be able to do more of that, those kind of impacts. But I think we might have similar offers when it comes to the basic products, such as housing loans or saving accounts and these kind of things. We didn't have an interest rate the first decades, which is new for us. So that might have been another difference, which is not a difference anymore. Okay, I think we have 2 minutes left. So I don't know if you have any final words, Hans, that you would like to say before we end this. If there's anything you felt that haven't been said or you want to clarify or anything like that.
No, I think I was doing something wrong here, but do you think different? Yeah. Okay. No, I think it's always very interesting to compare these different kind of ethical banks and what their success factors are. And for me, what I learned, and I don't know how it is for you, it's like I said, it is pioneering. And when you grow older, sometimes you lose that pioneering spirit. And I think it's very important to remember all the time, and I think that's the exercise we have done over the last few years. What is actually the societal need where you should give an answer to? That's the way to stay relevant, and that really changes over time. It's also a very hard question, because it might also mean sometimes that the clients you currently have are not the clients that you need to have, and that kind of questions that should be asked every year again for your strategy.
Thank you so much. I think we have a lot to learn, and I think we'll probably do some more in-depth diving and study your work and learn from you, because you said in times of crises we might grow. That's exactly what we're seeing at JAK Bank, and we had more than 550 members just joining the past few months, and we have very limited marketing capacity. So I hope that with all the insecurities and uncertainties and all the geopolitical things that are shaking in the world, it will be for the benefit of our work at least. So once again, thank you so much for taking your time. We had a really nice word say in the chat, also saying that I really heard such clear words from a banker, at least not in public. And I know this person is a former finance guy as well. So those are very, very accurate. So thank you again, Hans, for being here. And thank you everyone who tuned in this Wednesday evening in the summertime in Netherlands and Sweden. And I hope we get to see more of your work. And I hope everyone who's not a member of JAK and are based in Sweden, please become, or if you're based in Netherlands or you're in Spain, UK and Germany as well. Mm-hmm. Yes. Yeah. So that will be the alternative if you're not based in Sweden. So to join Triodos. But thank you again and have a lovely evening, everyone.